Hey everybody, thanks for joining me on this Facebook Live, and please forgive my appearance. I've had a cold now for a couple of days. My eyes are a little red, and my nose, I think I've blown my nose maybe like 1,000 times. But anyway, of course we're going to be talking about buying or selling a home. Specifically today we're going to talk about home loans, and a lot of times people overlook this. And it's something that can really impact the interest rate that you get. And so that's very important. We're going to talk about that. And if you are thinking about buying or selling a house, or you need to get a home loan, refinance or purchase loan, reach out to us. We'd love to talk with you. We might be a good fit for you. We may not, but if we get on the phone and talk a little bit, we can probably begin to figure that out. You can go to showcasecall.com to schedule a time for us to talk, or you can just pick up the phone and call us 949-662-3150. All right, so let's get to it. What we're talking about is something that everybody should do before they get a home loan. And ideally, you should do this probably about 3 months out from closing on your loan. And what I'm talking about is how you're managing your credit card debt. So some people know this, some people don't. But even if you're paying your credit cards on time, they can still drag your score down. I know that doesn't make much sense. Why would that matter? If you're paying your bills on time, why would that hurt your score? Well, if your balance is more than 30% or 30% or more of your credit limit, then it's going to bring your score down. So let's say you got a credit limit of $1,000. 30% is going to be $300. So if you're carrying a balance more than $300, then it's going to bring your score down. If you got a credit limit of $10,000 and you're carrying a balance of more than $3,000, 30%, then that's going to bring your score down. Some people think, well, I pay the card off every month. Well, the way that the credit reporting bureaus get the information from the credit card companies is what happens when your credit card statement goes out. That's the amount that's reported to the credit card company. So let's say you got a $10,000 limit on a credit card. You got a $4,000 balance. Maybe you use your card for work and you turn in an expense report, and when you get paid from your reimbursement, you pay the card off. Well, unfortunately, the credit bureau never sees that card is paid off, because what they're always seeing is what's reported on the statement. So if you're carrying that kind of balance, then the best thing to do is to go ahead and start chipping away at it and get the balances down, because the carrying that kind of balance on your credit card is what's going to cause your score to go down. And then your score is really the number one most important factor to getting a low interest rate. And we've been doing loans for a long time. I got licensed as a loan officer back in like 2005, I think. And right away I saw where people were not getting the interest rate that they could get just simply because of the credit card debt. And so if you've got some money in the bank, of course, if you need that money for your down payment, you don't want to spend all your money paying off your credit card. But if you have some extra money and you can pay that card down, if you could at least get it to 50% of the limit. So let's say your limit's $10,000 and you got a $7,000. Let's say your limit's $10,000 and you're carrying a balance of $7,000. Then what you're going to want to do is, if you can't get it all the way down to that, below 30%, which would be $3,000, at least get it to 50%. That's kind of like the first level that you want to get it down to. And it can make a big difference. So like before I hopped on this live, I pulled up some numbers. So like if you had a 680 credit score and we were doing a conventional loan for you, you'd be looking at an interest rate right now of 4.875. But if you had a 720 score and everything else being the same, that would drop your interest rate down to like a 4.375. The difference in that is about $200 a month. so you're talking about $2,400 a year. After a few years, that really, that really adds up. So if this stuff is kind of new to you, you're like, well, I just don't know how to manage my credit, or I don't know how to get my credit score up, reach out to us. We'd be happy to give you some tips and pointers. Sometimes it's some really simple things you can do. Sometimes you'd be surprised at what you shouldn't do. Like, for example, if you've got some collection accounts, sometimes it's best just to leave those alone. If you start messing around with those and paying those off and they're old, all of a sudden now they become new. So we're happy to help you out with that and figure out how we can get your credit score up, because your score is what's going to determine your interest rate. It's one of the things, but it's the number one thing. So that's very, very important, especially if you're doing an FHA type loan or even a conventional loan. Either one, you're going to benefit by getting your score up. So, and again, if you're thinking about buying or selling, we've got some programs for both. If you're selling, we do a flat fee listing of $3,150. That saves you a lot of money compared to like a traditional broker that charges 6%, and we do a guarantee. If you're buying a home, we do a cashback rebate, and you also get a guarantee on that as well. So we want to make sure you're happy if you're working with us. That's why we do the guarantees. And if you want to know more about that and you're serious about buying or selling or getting a loan, just reach out, give us a call. Our number is 949-662-3150, or you can go to showcasecall.com, and there's a calendar on there. You can find a time that works for you and click a few buttons and get scheduled with us. So, all right, let's see. Just checking to see if we got any questions or anything. Looks like that's it. Hey, I hope you guys found this helpful. Again, just to kind of sum it up, if you're carrying some credit card debt, it's going to bring your score down if the balances are more than 30% of your credit limit. And don't think that just because you're paying the balances, just because you're paying those credit cards on time, that it's not dragging your score down. It actually can drag your score down, and it will drag your score down. Another thing that I forgot to mention, I'll throw in here real quick, is if you've got, a lot of times now credit card companies and your bank is telling you, hey, your score is this, you got a 700 score, you got a 680, or you got a 740 score. The score that the lender is going to pull is going to be a different scoring model than those scores that you see. And the lender is also going to pull 3 scores, and then they're going to go with the one that falls in the middle numerically. So there's more to it than just saying, well, my bank is telling me, or my credit union is telling me I've got a 700. The lender, like when we pull those scores, the score could be higher or it could be lower, depends on the model that the credit union's using. We're going to use the same model. All the banks, mortgage brokers, mortgage lenders, they're all going to use the same model. So that's something to think of too. And the other thing is, you want to start getting that credit card paid down, typically about 3 months or so before you buy the house. And the reason is because once you pay it down, we've got to wait for the credit card companies to actually report to the credit bureaus with that lower balance for you. Okay, so I hope that makes sense. Again, don't stress out over this stuff. That's what we're here for. Reach out to us. We're happy to help you. We get on the phone. We'll talk through some things, find out what you're interested in doing, and see how we can help. We might be a good fit for you. We may not. We won't know until we get on the phone. But either way, we won't ever pressure you into doing anything. We won't do anything weird that makes you feel uncomfortable on the phone or in person. We really just want to help you get into a home that you love and make sure that you got the best mortgage rate that you can get so that it saves you some money. And reach out to us, give us a call. 949-662-3150 is our number. Or you can go to showcasecall.com and click a few buttons and get scheduled. All right. Looks like there's no questions. Thanks. If you are listening to this, if you would, please just go ahead and type in showcasecall.com. That way there's a link in the comments. It makes it kind of easy for some folks. All right. Hey, hope you have an awesome day. Thanks so much for watching, and I'll see you guys next time. Take care.